Let's find out what's the latest in the commodity markets, given all the headlines around tariffs and Mr. Donald Trump. Let's go across to Manisha for the latest. Manisha, morning.
Morning, and thank you for that. Well, I'm looking at the crude oil prices, which are trading nearly a percentage point on the lower side in the Asian markets. This is after crude put a weekly decline of 3% in the previous one, and this actually has been the biggest decline since the month of November. January so far, though, has been positive, up 3.5% right now. But I also want to take you through the highs and lows that we already have created for the month of January. So when you look at the WTI prices, we've seen a low of 72 and a high of 79. That's how we saw the prices trade in the mid-January there. And currently, we're trading at around 74. For the Brent as well, we've seen a range of 82 to 75, and we're trading at 77 right now. So somewhere in the middle of the range or on the lower side is how the crude has been. And as you can see, it has been nearly $6 to $7 of a range already coming in for the crude oil prices. There have been various reasons for this recent decline. One, the U.S. has been asking OPEC to reduce prices. U.S. also, in any case, OPEC is increasing production from the month of April after that recent postponement. But U.S. also has announced to boost U.S. oil and gas output as well. The markets also are looking at the U.S. imposing retaliatory measures at Colombia. As of now, the kind of imports that U.S. does, nearly 41% of Colombia exports actually come into U.S. I mean, not a very strong number, but then U.S. is an important market for Colombia. And with the way that we are looking at tariffs moving, this would mean higher crude prices. But that really doesn't seem to be a concern right now. That is because the U.S. oil output itself is on the higher side. When you look at 2024, we hit an all-time high of 13.2 million barrels per day. Now, this year, the expectation is that U.S. will be producing record highs to the tune of 13.6 million barrels per day. So clearly weighing onto the markets there. The other thing is about the U.S. oil and gas rigs, which have continued to decline. But that doesn't seem to be supporting markets right now because the acreage is increasing. As per the Baker Hughes report, in 2024, you saw the rig count decline by 5%, which was down by 20% in 2023. And this year, until now, we are down by almost 7%. But this is still early days, and the markets will want to watch out for further numbers there. Russian sanctions is another thing that you need to keep an eye on. This does impact India as well. So while Indian Russian oil tankers, the clarity says that until Feb 27, the discharge can happen. The second important point is that India will continue to buy Russian oil until the prices are sub $60, and the freight and logistics is not sanctioned by UN or US for that matter. Importantly, when you look at the Indian imports from Russia, pre-Ukraine war, it was just about 0.2% of our total imports. As of now, it stands at a big 33%. So clearly, slightly disrupting for the Indian markets as well. This week is going to be important because you have monetary policy meetings from not just US, but Canada and European central banks as well. And then, of course, the Indian annual budget as well. So going to be quite a volatile week in that sense. But some more decline is what you can anticipate when it comes to crude.
All right, Manisha, thank you very much for that. So that's oil prices in focus. But